All right, hey there, Chris Franks with Tech. Here on Tuesday, the 28th of June, 2022. And we're here to talk about the markets, guys. We're going to let you know what I think's going on. As always, pay attention, mostly to the larger picture. The shorter term is always a bit more iffy. If you guys haven't figured that out, then don't trade with as much money as you might be trading. The shorter term you are, the more chance you have to be knocked out of your position as price action unfolds. But the larger the time frame, the more leeway you have in there. So always keep that in mind. Anyway, gosh, just after 11 a.m. Central Standard Time, right? Over here in Bernie, Texas, we got rain yesterday. Looks like we got rain for the next few days. I'm this much closer to potentially relocating to Houston, still looking over there. It's just been, with the housing market, man, it's been tough. You don't want to buy at the top. And, we've seen, 4 months of declining prices now, guys. Speaking of housing, so here's my thoughts. Again, I talked about the top likely being in a few months back. And, again, we've seen for the last 4 months, overall prices have been dropping. Maybe not necessarily so much in your area if you live in a higher area, but, a higher price, more desirable area. But just nationwide, prices have been going down over the last 4 months on average. Houses are staying on the market longer. Back here at the beginning of the year, the end of last year, they were on for like a day, or I was talking to my realtor, a buddy of mine, and man, they were getting like 20 offers the first day a house came up, and for higher than, the price ended up being higher than what was, than it was being sold for. Originally being listed for. So, I mean, we don't have really much of that going on anymore. So, you want to be careful. But do we have a crash coming in? Yeah. I'm hesitant to say we might have a crash. Right now, it seems that we've still got more demand than supply right now, even with all the new houses that are coming up, and even with buyers kind of pulling back, not being as aggressive as they were previously. It seems like, from what I'm finding online, from the different data sources there online, it does seem like we've still got more demand than supply. Again, guys, 6%, 7%, that kind of area, it seems high to us because we were just down at 2% a year ago, right? But historically, we're about mid-range. We're about average right now. So, prices are, interest rates are heavy right now for, mortgage compared to what they were a year ago. But in the grand scheme of things, it's kind of, average there. So, I don't know. I don't know that we necessarily have a crash. I think, you look for the good deals out there, which is what I'm doing right now. You look for something that, especially if you plan on staying in for a bit, look for something that's a really good deal, and probably jump on it. You'll probably be all right as long as you can continue to pay it. You've got to take into consideration the fact that a lot of companies are slowing down hiring right now and slashing positions. This is something we've talked about for the last few years coming into the potential top of the cycle, the economics kind of turning down and whatnot. I don't think the Fed's going to have the power to keep, or that they're going to want to keep raising rates. I think, again, I'm looking at end of Q3, beginning of Q4 to look at maybe some pullback in that interest rate hikes. We had a 50 basis point hike a month ago or whatever. We just had a 75 basis point hike. Again, we hadn't had a 50-point basis hike since the dot-com bubble back in 2001. So, there's a lot of moving parts going on right now. So far, I've been ahead of it. If you guys are following me, we're usually talking about it before it happens. What the Fed's going to do. And again, I don't think that they continue necessarily, at least not being anywhere near as aggressive as what they've been. I think they slow down a lot or maybe even reverse course a little bit, but I don't think they reverse course yet. I mean, I think that's going to be a little bit off, but here within the next, few months here, again, end of Q3, beginning of Q4, I think we start seeing a reprieve on these interest rate hikes, on these interest rate hikes. I can't even speak today. So, that's what my thoughts are right now, especially as we're kind of going through this and I'm looking to relocate on the housing market and whatnot, what's going on there and kind of how it, we've got all the external pressure there from the economy and the Fed and all this kind of stuff. So we'll see how it all turns out there, right? Who's here already? Name Mr. Wilkes. What's up, man? Andrew Bennett checking in. Chance. Hello, sir. Good to see you. Data always here. Dancer Eddie. Still love the name. What's up? Arrow Quinn's here. Who we got? The Magic Lord BTC. Why is this channel dead? Because people don't want to learn. That's why. People want to be told, listen, it's going to do this. They want just 1 minute sound bites. Bitcoin's going here. That's it. That's why this channel's dead, as you say. But if you want to learn something, you hang around. So, I mean, it's up to you. Your choice. Blaze, what's up, man? Jared the Great is here. He says, sold my house and been renting the last 3 months. Man, even rents are kind of crazy now, right? Even that rental. And again, it's that idea that, we're running out of supposedly supply. There's supposedly a bigger cadre of buyers than there are of sellers at the moment. So we'll see how that continues to play out. Of course that's gonna come on down some. If the market's if the economy's really at the top and we're really going into this recession, possibly depression type thing, obviously that's going to change things. But for right now, it is what it is, right? Hey there, Martin. Good to see you. Melissa, good morning. Travis, what's up, man? Hey, all right, good to see you there as always. Andrew says, bear market scares people away. It's the best time to learn. That's it, man. You should be building, guys. I don't think a lot of new traders out there pay attention to these things that are said, right? So like in crypto, everybody says, bear markets are the time to build, right? Everybody's building, right? But are you building? Are you building your skills? Or do you just disappear when the market's down and you jump in when the market's at all-time highs again? That's what most people do. And that's why most people lose money, guys. It's really that simple. If you're serious about trading, serious about, either doing it full-time or at least as some source of secondary income or just as some way to build up for your retirement, I mean, you either do it or you don't, right? If you're serious about it, you do it. You spend your time, you learn. And when the markets are coming down, you get in there and you learn. You don't just get out of the market because it's coming down. Because guess what, guys? As a trader, whether the market's going up or down, it shouldn't matter to you. It only matters to investors, okay? But as a trader, you want the volatility. All you need to understand is which direction price is going, get in it, ride it for a while, get out before it's done moving in that direction, rinse and repeat. That's all you have to do, whatever time frame you're on. It really is as simple as that. Sadly, trading is not that simple, right? But the concept is what it is, guys. I mean, that's what you do. A lot of new traders come in and they think, man, I got to get that highest price or that lowest price. These are events, guys, and you will rarely, if ever, do that even once in your trading life. That's the reality of it, but that's what everybody chases, right? Nah, why are you going to make it difficult to make money for yourself? Understand where the trend is, get in on that trend, ride that trend for a while. Don't worry about getting out at the very top. Get out before it's done. So you can lock it in and you can plan for the next trade. Gosh, if only people would do that, right? But I can sit here and say it till I'm blue in the face, and most of y'all will never listen to it. It is what it is. But the few of you that do, you're going to find that you're going to have a lot easier and a lot more enjoyable time trading. I promise you that. Jonas, what's up, man? Been a while, bud. So that's what we're kind of looking at there. Hey, guys, join us here at howtotradetowin.com. We'd love to have you there. I told you last week to wait until we got the sale going. We've got the sale going, guys. I've done something now that I have not done in quite a while. And I mean, like a couple of years now. We're giving you 40% off all memberships, guys. I usually just pretty much stick to tier 3 because honestly, that's where it's at, guys. That's where where it is, where you have all the education, you have everything, right? But this is off our regular price, all memberships, guys. So BMA is the tier 1, tier 2, tier 3, whether it's monthly, quarterly, biannual, annual, whatever, 40% off all of it, regular price. I don't know when the next time we'll do this is. Like I said, it's been probably about a year and a half, 2 years since I've done it with everything. A straight discount. So there you go, guys. We're going to do that. Hopefully to get you, learn a little bit about something going on there, right? But it's a July 4th sale, so, it's like a week long here, and then it'll be done. So make sure you guys are jumping in as quick as possible to get in on that, all right? howtotradetowin.com is where you guys can do it at. As a reminder, I do have, we're going to start releasing some newsletters over the next month or so. We've got, you can just look me up in there, Christopher Inks, INKS. 15 pips a day, applied socioeconomic theory, F extra, the market breakdown, options forecaster, trade psych digest. So pretty much everything that that I do on a daily basis, just put into their own kind of areas, their own kind of categories. A few of them will end up being paid. 15 pips a day will be paid, and that's going to be FX currencies. And so we'll be looking at a trade a day every weekday. The goal is to average at least 15 pips profit daily, because what I found is if you can do that over the course of a month and longer, you're going to get where you want to go. And so that's what that's all about. Applied socioeconomic theory, man. Of course, we're going to look at Elliott wave theory and applied socioeconomic theory with the markets. F extra is the look at the currency markets, FX market, including upcoming data releases, government numbers, what that maybe means, general directions for the currency, stuff like that. Market breakdown is always going to be the relaunch of what we did originally, which is all about macroeconomic stuff. So, you know, we spent a lot of time, I spent a lot of time last year talking about banks and banking and monetary creation and stuff. If you went through that, you learned a lot. You found out that, hey, just because the Fed prints dollars doesn't mean squat. Because legally, the Fed cannot just hand you the money. It has to go through a bank. So the real dollar creation happens, the real currency creation happens there at the bank. And then we talked about the ideas of you know, inflation and deflation, and how when you're paying down credit, how that's deflationary because it destroys money, right? So everybody concentrates on how much is the Fed printing. Nobody concentrates on how much is actually making out there, or where it's going, or what's happening to it once it's out there. You know, if the Fed prints $100 and it goes through the bank and it makes it out to you, and then you use that $100 and pay off $100 on your loan to the bank, guess what? It cancels it out. It's no longer in circulation. It's gone. And so, you know, a lot of these things, you know, everybody's talking about hyperinflation. You know, people are clueless, guys. And it's just, and it's not that they can't learn. It's not that you can't learn. It's just that most people choose not to. It's all about sound bites, right? So anyway, we'll go into that. Options forecaster is going to be kind of like 15 pips a day. It'll be options trades throughout the week, option signals. And so that one will be paid. Trade Psych Digest is all about trader psychology, guys. Kind of explaining you the, you know, again, trader psychology, how traders tend to look at the market, how you may be looking at the market, what to do to change it, how you should be looking at it, other things you can look for, how it affects you, stuff like that. So anyway, get signed up for them, guys. Even on the paid ones, we might give a free trial for a bit. So get signed up either way. You won't get charged without knowing, guys. You have to agree to be charged. So jump on that, all right? All right. Let me see here. 83 Madden, what's up, man? Good to see you. Excuse me. Let me see here. Okay. So was kind of looking at this Biddy. This is the Bitcoin short ETF. And yeah, I've got it on the line chart here just because, whoops. Just because you put on candles and it's really kind of to read. Let's see. We've got a swing high up here at 40.25, and then this morning 40.28. So we've actually got a little bit higher here. So this might actually be wave C of 2 coming in right here. So you get like an A, B, C, or even a WXY instead here. So I'm kind of looking at this. If we break out above this swing high up here at 42.01, that's going to invalidate this. It says that the that this ETF should run higher, right? But if we break down below wave B here, that opens up a move potentially down here around 35.20. That would be that wave 3, the minimum expected target down there. And things start getting interesting then. So we'll see what happens here. As you can see, the 15-minute, you know, we're well overbought here. We're kind of, you know, just kind of bullish on RSI at the moment. But, you know, as you get into the hourly here, again, almost topped out and overbought. Stoke RSI. 4 hour, again, you know, not much information there because it's only been a few days that it's been here. So we're waiting to see as this plays out a bit more. Why is that important? Because probably if we get this move down lower here, that'll probably signal a shift in maybe in Bitcoin as far as the selling pressure, whatnot's going on to it. How does the market feel about it? So it might give us more clues into what's going on with that. But anyway, definitely something to pay attention to there, right? All right, so what are we looking at here? Bitcoin. Let's see here. Okay, so this is the 15-minute chart here. Now, let me zoom this out here for a minute. Okay. So you see the 1 hour, we've almost reset into oversold on Stochh RSI. Even RSI is nearing it. Now, right here, I've got this as a 1, 2, and potentially a 1 with a flat and a 2 here. But we haven't broken out above. We got to break out above wave B up here at 21. What is that? 21,866 to say, okay, that's done there, right? Until then, we can potentially look lower. Now, locally here, we've got this wave B right here around 21,103.72. So if we can rally up above that, that's going to be the short go and say, okay, it looks like we're probably going to be targeting this wave B up here. If we can break out about that, it says, okay, wave circle 3 is in progress to around 23,345. That'll give us a wave 5 up here at this dark blue, bluish purple kind of supply structure up here at around 24,000, if we can get that. Now, we had a pretty deep pullback here, 90 somewhat percent, but it hit this 1 hour supply, or 1 hour demand structure right here in the wick. And so now we got to see, can we, carry up further? We've got these areas, these support resistance areas right here in red that have been pretty significant. And so as you can see here, we hit it and we're pulling back. Now, can we continue going up? We'll find out here. If we check here, look at that volume coming in on this bottom right here. On this one, this low. So we might have just kind of cleared the way here. You can notice that we ran right up to the previous swing low. So we might have just cleared the way to head it up higher. If we can get a breakout higher, then I feel good about potentially reaching this wave B up here and continuing up. I say wave B. It may actually be wave, X. We might have a, an ABC for W, and then a flat here for X, and then an ABC for Y. Or even ABC is W, and then X up here, and then ABC is Y. So I think it might be a WXY coming off there. Question is, do we continue up higher? If we drop down below wave 2 here, I think maybe, because you can look at this, there's a couple of different ways to maybe count this here. You can look at maybe, like I've got this as a 1, 2, 3, 4, 5, and you get just a little bit of overlap here. Basically, it becomes a diagonal, right? So you go like an ABC 1, 2, and then maybe an ABC 3, 4, and then maybe an ABC is 5. Could be. But again, you got to be watching this right here, because if we drop down below the swing low, then we're done, right? In that case, I guess it could still be, no. You could look at maybe like, again, ABC is 1, 2. This would have to be an ABC is 3, and then 4, and then maybe an ABC is 5. So we could get a little bit lower drop there and finish off that Indian diagonal, rally back up. But again, ultimately, we have to get above wave B here, 21,866. Until we do that, it's still possible that we could head lower down, right? So what does that mean? Well, jumping up here. All right. This one, man, this was a pain in the rear end, honestly, counting this. And it still may not be correct. We've got a pretty clear 1, 2, 3, 4. It looks like 5 here. So it looks like I got a pretty clear 1, 2. This was just a real rat's nest. But maybe a 1, 2, 3 is a triangle, or 3, and then 4 is a triangle, and 5. And so then that would give us wave 3 of impulsiveness, because wave 3 can't be overlapping. Wave 3 should be impulsive, right? When you've got that 5 waves going up. And so then you have 4 as a triangle, and then you have 5 finishing up here potentially, right? And you have A, B as a triangle maybe, and then C gets us B, and then C with 5 down. So that gets us the 5 down there as part of the correction, because then we go up higher. So if you've got 5 down, 1, 2, 3, 4, 5, and you go into a new high, that signals that this has got to be part of a, if you're coming off this this trend here, this upper trend, that's got to be part of a flat is what you're looking at. And so again, you get A, B, C, so that gives us a bigger flat, and then just looking for 5 down here. Now, here's the thing. Give me a minute. Still getting over the allergy stuff. Now, here's the thing. Even if we drop below wave 2 here at 19,751 and 51 cents here on Coinbase, even if we drop below that, that doesn't say, oh my God, we got to go to new lows, guys. So anyway, okay, well, listen, you're fun. Goodbye, idiot. You know, some people are such turds, right? But hey, you know, those people out there losing money left and right. That's why they come on. They want attention. Mama didn't, cuddle them enough, I guess. And they didn't come on there. It is what it is. Social media is a cesspool, guys. Don't get too hooked into it. Anyway, so even if it does break down below here, the thing is this could be a flat playing out here, right? And so what that would mean is that this would be a 1, and this would be an A, ABC down. And then maybe this would be an ABC here, right? And then we'd have 5 coming down, either just below wave 2 here or secondary target down here at this orange range, which is basically 18,780 to 19,135. So that's all we're looking for. So no big deal going on there at the moment. I know all of your large accounts for the most part are basically screaming that it's got to go down lower. We've talked about this time and time again, and consistently they've been wrong at the lows, right? Just like they've been wrong at the tops. At the tops, they tell you buy, buy, buy. The bottom tell you to sell, 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 because it's human nature, guys, right? They've got large followings, not necessarily because they're all that great most of the time, but because they, market. They tell you what you want to hear. You do it. So just be careful out there. Well, to be fair, Elliott Wave is not pretty useless anywhere, to me anyway. It's a great thing to help you understand what's going on. The great thing about Elliott Wave is it keeps you from being emotional, guys. It does. And it lets you know where there's going to be a potential reversal. So if you don't know, especially if you don't know how else to read markets, it ends up working really well. So, yeah. It's not that simple. 99 possibilities and nothing to watch. It's not that simple. If you do it correctly, guys, there's definitive ways that you're looking for. Now, sometimes, you're going to zoom out to a larger time frame because the chop on a shorter time frame is just too much chop to spend time wasting, trying to figure out every little wave. But yeah, again, guys, if you're doing it correctly, it's not a waste, right? You do it right. Anyway. What was the site I showed before? Which one, Yerrick? For the newsletters? I'm sorry, guys. I meant to say it's substack.com. Substack. So that's where we're going to go with that. Yeah, Elliott Wave is, I don't even know that it's hard to do well, honestly. It's how do you approach it? It really is, guys. Elliott Wave, again, I tell you this on probably every week. The number one way you should look at Elliott Wave is understanding the trend and where the potential reversals may come from, okay? Not exact targets, okay? I think if you're doing that, it's going to make most of your Elliott Wave a lot more correct, a lot easier. You're trading a lot better. But it beyond that, it gives you definitive areas of validation and invalidation, right? So even if you're reading it wrong, if you're reading it wrong and price goes through the invalidation level, you're wrong, period, right? If price goes through your validation level, then you're at least correct until you aren't anymore, right? So you're at least on the right track for then. So that's the great thing about Elliott Wave, guys. But most people don't put the time and effort required into it. That's just the way it is. Everybody is lazy. I say everybody. Most people are lazy. And that's the problem. How are you going to get good at something if you're constantly... if you half-ass it for a day or a week or something, you never really go in and learn how to do it correctly in the process, right? You guys have to remember this stuff because it's not just Elliott Wave. It's any other way that you look at the market. You have to practice it correctly. Okay. Um, so anyway, um, but anyway, let me see here. So is the BTC ETF short a reverse to the BITO ETF? Yeah. So basically, yeah, the BITI, the BITI there. Yeah, it's basically just a short ETF, for Bitcoin, for shorting Bitcoin, for shorting Bitcoin. I mean, you're not actually shorting Bitcoin, but it's an ETF that you can short the price of Bitcoin, right? Without actually touching Bitcoin. It gives you exposure without having to do in cryptocurrencies. As I keep saying, guys, I've been talking to you about this for the last couple of years, and until all this wallet stuff and everything gets simpler to use, there's still a lot of people who aren't interested in doing it. They might be interested in, longing or shorting Bitcoin, but they don't want to actually get into Bitcoin. And that's why things like this end up becoming popular, because it gives them the ability to play those prices without actually getting into crypto. Because heaven forbid, you got to remember all these stupid long alphanumeric addresses and then hope you did it right, because if you didn't, you're not getting your money back. And now, they're making inroads around that now. But still, for most people, it's a lot more difficult than they want to deal with. Everybody that pushes freedom of some sort, it's always like, be your own bank or be your own security. Nobody wants to. They'd rather have government tell them that their money's safe or that they're safe and the government's protecting them, even though it's not really. But people are going to buy into the nonsense, right? So, it just is what it is, guys. Until cryptocurrencies become much more, much easier to do, and just for the average person, guys. Until it does, there's still a lot of people that aren't going to be involved in it, So, yeah. So anyway, that's what we're kind of looking at here. So we'll see what happens with all that. Bitcoin is where it is, getting a pretty good rally so far, but still getting caught at this support resistance of a rally up. And, again, wave 3 up here at 23,345, minimum expected. Now this wave 3, I don't know, we've dipped back further here, so I've got to change that. If that's just a deep wave 2 there, give us a wave 3 right around the 15-minute R1 pivot. That would make sense, right? 4-hour pulls you, wave 4 pulls you back to the 15-minute pivot. Wave 5 then hits the wave B up here. I mean, that makes sense. If we're looking at how does price action develop, well, that makes sense. We'd get this wave 1 up through, up through this previous swing high, which is what we generally look for. Then we'll pull back again toward here, right? Toward this wave 4, and then we'll break out higher. So that makes a lot of sense if it does it. We'll see if it does it, guys. We can look here at what we've got going. This right here is the CME futures. Again, it's another, none of these things determines price by themselves. The price of Bitcoin is determined by a combination of futures, SPY, even things like GBTC and BITI and BITO and stuff like that. I mean, all these things contribute to actual price discovery, right? And so if we look through here, it's possible that we may have like a 1-2 here, and potentially a 1-2, or it might even come down a little bit lower here. If it breaks down here, you can look for that S1 pivot. But if you're dropping below the wave 2 here, this wave 2 support right there at 19,760, that means we're probably headed down. If you're into gaps and all that, you've got this weekend gap up here. They're right around 26,945 from back in, what day was that? Beginning of June, June 13th or so. So you can look at that, but you got this nice kind of rounding bottom going on here. You can see a high bit of volume coming in. Up here, going through, you've got support coming in there. Let's see, lows, highs, lows, highs. Yeah, so you've got a lot of supply and demand going on here. So, there's nothing saying here that it has to go up. But yeah, if we can get a breakout above this wave 1 right here on the CME at 21,530, that should carry us up Right now, wave 3 is right there around 23,245. As long as we don't lose this swing low here. But again, we could end up down here at the 50 at the S1 on the 1 hour rally up. 1 hour Stochc RSI is almost reset and oversold. RSI is still kind of sitting up there just on the bearish side of neutral. Right around, what is that, 40, 41, 42, 43, right around there. So yeah, we'll see if we can get some breakout. It's just chop right now. Same thing that we're seeing on Bitcoin itself, right? Let me see here. Let's see. So dollar, if we jump into the dollar, remember, big picture on the dollar here is this. So this is the weekly chart. Broke out right above the local range here. Kind of trying to find some support on here. The question is this 3 and then A, B, C as a flat for 4? Or is this 3, 4, and then maybe working on 3? So 3 is either here or it's still coming. That's what we're looking at. I think right now I'm looking at maybe we've got a triangle going on. So maybe 3's done and wave 4 is doing a triangle. With this triangle, we've got W working on X as a triangle, then we'll have Y of C. So this cannot rally up above wave A here. 105.085. If it breaks out above that, this triangle is invalidated. And then it's likely to invalidate this larger triangle. But this larger triangle isn't invalidated until we break out above wave B here at 105.788. So here's the thing, guys. If you're concerned about the dollar strength, then you want to see something like this. If you're not going to see the dollar go down, you want to at least see it go sideways. Because if it goes sideways and you believe that it puts pressure on legacy and Bitcoin or whatever, well then, by going sideways, in general, it's going to take a lot of that pressure off, that downward pressure off. And so then you would expect, legacy and, Bitcoin and whatever to kind of go up. Potentially, right? At least it has more of a chance. If you're of that belief, then it would have more of a chance than if it were going, than if the dollar were, just continuing higher. So this could take a bit, as it does. Again, we'll get a B, we'll get a C, then we'll have a D, and then we'll have an E, and then we'll have to go up. But even locally here, it's just, C, we'll have to get a D, we'll have to get an E, and then down to finish wave C. Then 3 up for D, 3 down for E. And then we'll break up. Now, here's the thing, though. If this is 3 and this is 4 as a triangle, then we'll have 5 up, and then that's 5 up, right? Now, it may just be 5 of 3 or maybe 5 of 1 heading up there. But either way, there should be a larger pullback that takes even more time with the dollar. Again, if you're of the belief that it's going to hold back equities and crypto and whatnot, then that pullback would be significantly bullish for both, right? So just some things to keep in mind as it continues playing out, but it's just been a bunch of sideways. Really, guys, look at this. If we look here from basically the end of April, it pulled down, rallied up, pulled back down, rallied up. Kind of where we're sitting, right? Just a lot of sideways for a few months, which makes it a little bit more difficult to trade some things, guys, okay? Let me see here. What's up, Daddy OJ? He says, is there a bear div on the weekly DXY? Let me jump back up there. Locally right here, sure. But it's weekly, so it means it's going to take longer to play out if it is significant. So it's not like you go, oh, look, there's a weekly and that's it. It's got to go down here. It may not. It may just be a temporary pullback here and then continuing up. And then you'll see this continue up here. So you just want to be careful of that. Right now, it does look like it at the moment. And these are the US dollar index futures here, guys. You can do these on the ICE exchange. And as you'll notice, look at all this volume coming in at the top. So that's not really constructive for bullishness, right? But again, could just pull sideways for here a bit as I'm looking at maybe a triangle, right? And then push up higher. So yeah, there is one right there. But we've only pulled back right here. So, again, could continue to push up without actually confirming that kind of bearish divergence there. Okay? How do you know if it's play? Oh, you meant on the daily now. Let's see here, daily. I mean, we had a bearish divergence right here, which led down here. So I wouldn't necessarily go here, because you have this one that already played out that led to down here, right? So I would be looking at this as a new one, and then you've just got higher highs and higher lows, higher highs and higher lows there. Yeah, I wouldn't look at this on the daily again, because this right here was this bearish divergence, and this was the reaction down here. So now we're looking at the next, and now we're looking higher highs off this low down here. You see? Rather than off the highs there. Hope that makes sense. So anyway, yeah. So that's what we're kind of looking at with the dollar there. I think I talked about this last week, guys. Copper futures looking like they might have nailed out a top here, maybe like a large time frame, guys. We're talking about 20 somewhat years, playing out as maybe a leading diagonal here. 1, 2, 3, 4, 5. So yeah, maybe. Might be, right? We've come down to the S1 pivot on the monthly here. We do have room to fall further on the monthly. Monthly Stochc RSI is down there and oversold. Most of our volume coming in right in this area right here, and then it just a little bit further up and came down. So, you know, if I'm looking at this via Wyckoff here, this looks like the preliminary support or supply, and then the buying climax, automatic reaction, up thrust or attempted up thrust there. There's your up thrust. Or actually, it doesn't break out above though, does it? 48,230. 48, yeah. So it just be an up thrust there, and then drops down, and then last point of supply. This is your breakdown. So I mean, this is distribution as far as it looks like to me. So you might get a rally back up into it, which is usually what happens after you get this fall through the ice right here. It rallies back up toward there, and then it continues down further. If this is 5 done, wave 2, so this would be 1. Wave 2 should come on down here toward this wave 4, that's initial target. So wouldn't be surprised to see, you know, copper coming down here to around 205, 210 kind of area. But it does look like, with this going on here, that this may be distribution. Maybe. What we're looking for now is we're looking for a, let me see here. Let me just put this range on here. Oh, Jesus. Try it one more time. I don't have it set for the monthly. There we go. All right. So what we're looking for is maybe a rally back up into this lower half here, the bottom of the range, or this monthly pivot here. But we're looking for a rejection and a breakdown. If we can get a rejection or breakdown below the swing low, you know, we'll have our first target right around this, area right here. So, see if I can do this. Kind of like this purple zone here. And so that would be like an A, we get a B up, and then a C down here. And that would be, you know, expected to be that initial target there to finish that out. So, you know, still quite a bit of way to go on that monthly there, right? Let's see here. So yeah, I think this does look. It does look like possible distribution up here, but we want to see a rejection and send back down below the swing low there, and then again we look around this $3, 305 kind of area, and you know, and look for a bounce and then a rejection and fall back down toward this 205 to 220 kind of area here initially. Now, I mean, it could go much further down. It doesn't have to stop there. That's just, we generally look for wave 2 to initially target the wave 4 support area when we do that. But, copper is that, people call it Dr. Copper because it kind of lets you know what commodity cycles may be doing. And so if it's topped out, then usually it means commodities are typed out. Remember, we talked last week about the idea that that tops in commodities look like bottoms in equities because the psychology, right? So in equities, people are fearful at the bottom, so they keep selling, right? And so you get that capitulation. Commodities, people are fearful at the top, which is why they keep buying because of the idea of the scarcity. There's war, inflation, famine, something like that makes them want to buy the commodity, right? So they can make money on it. It's the fearful of what's going on economically, that might lead it. So your commodities go higher there, right? So copper tends a pretty good indicator of when commodities have topped out. And so we'll see. Again, it would make sense there and have this coming back down. Crypto MTNS, what's up, man? Better late than never. That's right. That's right. So, for those calling for 300 oil and whatnot, I'm not really sure that may be going in there. Again, we looked at this last week. This is your XLE, which is your Spider Select Sector Fund for Energies, right? And this says energy may be topped out here. And again, so we look for wave 2 to pull back toward wave 4, which is 46.20 or so. Right now, we're right around 75.40. So we'll see if we can get a 3-wave drop to this area. If we get 5 waves down toward here, toward the pivot, then that'll say that's A. We'll have B up here. And then we'll look, 61.8, 70.5, or 78.6. It just depends on how far that comes down. But those would be my 3 targets. I'd look below that if we don't just get 3 down to wave 4 here. Again, energy may be topped out, right? So what does that mean? Well, that means if we're looking at... let me get it up here. Oil. Everybody's interested in oil, right? Because it sucks, right? It sucks for sure. Let me see if I can find it right here, guys. Got an oil chart in here somewhere. Where are we at? There it is. All right. And so oil says, what does oil say? Come on, there we go. All right. Let me see, that's the wrong one. Oil, there we go. All right. So oil has kind of hit this target area I was looking at, which is the 50% retracement. Again, right there around wave 4, right? Now, is it done? I'm not sure yet. I'm looking at potentially a W, right? So like A, B, C is W, and then a triangle X here. And then we're looking for A, B, C for Y. So it's possible we've got A, we'll have B, and then we'll have C coming up here a bit higher. So we'll look if this continues pushing up. We've got this 70.5 up here around the R2 pivot. Is our next target. 78.6, it may even get all the way up here at 78.6, which is where you've got this high volume node. So we're just watching step by step here. So it's possible this could be A, we'll get B, and then we'll get C up here. Or that this is... maybe this is A, B. But this would have to be 1, 2, 3, 4, 5 kind of done here. It's got this real kind of odd looking overlap going on there. Now, it's also possible that if this is ABC as a W here, this could be X down here, and this could be A. A and then B, and then C coming up, and this could be finished out here. So I've just got like this basic kind of count on here. We're just looking at levels right now. If we get the breakout beyond here, we're looking at the 61.8, 70.5, and 78.6. It'll be better if we can get a little bit bigger pullback to kind of figure out what it is. But right now, I don't see any reason to think that we're going to break out above this swing high at the moment. This does look like quite potentially 5 waves down as a leading diagonal. So we'll just have to see. We get a breakdown through, you know, this wave 1 swing low here. We're heading down here toward, you know, $83, $84 for wave 3. But again, this would be in line with the idea that maybe energies in general have topped out, right? Right? Let me see here. Yeah, maybe in a minute here. Let me kind of get through these charts here. Let me see if I can maybe. What was that? DraftKings? But gambling? Yeah, let me get through these and we'll see about that. Natural gas. So here's natural gas. Looking at the pot again, same idea, right? Oh wait, no, that's oil. I'm sorry. What is that? Did I just put the wrong one in there? There we go. Here's natural gas. It didn't copy when I copied it. Okay. Again, potentially, it's a really short 2 if it's done. You know, right here. But it's, you know, wave 4, triangle resistance idea coming off the swing high up here. So I'm not married to the idea that this has to be done right here. I could see it potentially rallying up further. And if it does, could potentially see it heading up here toward the 61.8. The 78.6 you'll notice is that high volume node. Kind of the same ideas of oil. You know, we want to see this break on down below this kind of, this is the 1 hour pivot right here at about $6.41. If we can see a nice impulsive breakdown below there, that kind of ramps up the odds that maybe it's a short wave 2. We got wave 3 still going. But if we zoom out here, 4 hour, you can see we're topping out and oversold here. Overbought, I'm sorry. Now the daily is reset down and oversold, but it hasn't reset here. So, you know, that's your iffiness there. So this is the one thing that says, well, we could potentially see this rally up a bit higher, right? Because on the daily, we've got the doji and then the bullish engulfing, and then we've got follow through today. So it seems to suggest that we're heading up higher here. And generally, I would look at this daily supply structure right up here below the daily pivot. Now, obviously, the end of the month is coming up, so these pivots are going to change. But looking at the daily, without regard to everything else that's kind of going on there, I can see like an A and a B and then a C. Oh, I got rid of it. Well, up into this wick up here, up into this daily wick. Right around 7.5 to 775 or so. That kind of target area. Finish a wave 2 and then head on down, or a wave B. This may just be A and then B and then C coming down. But either way, I think we might still have that rally up toward that area before it heads down any lower. So that would mean this right here would basically be a 1, 2, 3, 4, and then get like a 5 in this area. So that gives us an A. Again, a B pulls back to this pivot kind of area here, and C rallies it on up there. Any thoughts on silver? Jeffrey would like to know. Yeah, about to get to it, man. Sure thing. I still think right now that silver's heading down below 10, potentially around $7.5, $8. Same thing I've been talking about for quite a while now. Gosh, over a year, right? 2 years, maybe even. Gold still looking at potentially below 1,000, around 850, 900. But there is the possibility we could get a reversal at 12.5 or so, 12.5, 13, 12.5, maybe $1,250. Just in general. There is no time. I don't have any idea when to expect the gold and silver prices to go there. I don't deal in time frames, guys, as far as when are they going to get to the target. I just deal on the structure of the market. Because the market, I mean, guys, look. Look at how long we've been going sideways right here. Potentially doing a triangle. No, not even any confirmation on that yet, right? And we've been months. This happens with everything. There's no... I don't do the whole, prediction. I don't do predictions at all. We look at forecasting, but especially not in terms of time for things to get where they're going to get, guys. Because they can just take forever. or they can go right away all of a sudden. If you're in crypto, you know how quickly something can bounce, right, or rally or drop. So yeah. I've just found, guys, you know, quarter of a century doing this, that if you're spending more time, if you're spending a significant amount of time worried about how long something's going to take to do something, it tends to affect you emotionally, and you can't properly trade what's going on. So I tend to just not even try. It's guessing anyway. It really is, guys. Let me see here. Silver. Yeah, that's the next one. Silver says, survey says, oh, look at that breakdown, doing well. I've got a wave, parentheses 3 target down here around 19.225. Kind of zoom out here a bit. You know, again, the idea that we've likely got a 1-2, 1-2, and we're heading down now. And this is in line with kind of what we're looking at potentially for stocks. We'll look at the indexes here in a minute. But gold and silver, kind of the same idea here. Again, same thing as oil, right? Oil's got 1-2. We're looking for it to break down further, right? So all these things that usually run in tandem look like they potentially have reversed and about to head down, right? Now, no guarantees. As always, you have to get through levels, you know, validation levels that we talk about all the time. But until they do, I think the market says a lot more about downside, right? But as traders, you don't care, right? As traders, all you care is what is the direction in the time frame that you're trading, and you know, you get in it, right? I mean, that's what trading is. Gold has been doing this great little sideways thing here, but it does look like it's getting heavy. We're finding support right now around the weekly pivot. We're looking for a breakdown below wave circle B, support at 1816.30. And that would indicate, okay, minimum wave 3 target down around 1737.30. But, you know, again, gold, you know, again, looking at the idea that we've got this potentially as a 1-2 and then 1-2, right? It's just not showing up on the 12-hour time frame of the count. But yeah, 1-2 coming into 1-2 and then maybe breaking down. If we break down below this swing low over here, right around 1685 or so, that should indicate that we've got a double top here. And that double top target, the pattern target, is down here at around 1339, 1340. Most of the time, pattern targets are third waves. So, if this is 1-2, you know, 3, 4, 5 heading down there kind of idea, yeah, it could get us an A and then a B and then a C heading down lower, potentially. But the big thing here on the daily is that we do have this very large node here. This is why I said we could potentially just hit this 12.5, 1300 area, 1250, 1300 area, and that be done and rally up. It's possible. But if we lose this, we should be looking down here around 850, 900, I believe. It'd just be a large flat then. ABC, ABC, and then 5 waves down, getting us down there. So just something to watch as that continues to play out. But right now, you know, kind of do a sideways thing. Weekly RSI is just about mid-range here. As you know, there's a lot further it can fall there. We can note, see all this volume that came in on the weekly here? Right, swing high, and then you had this reversal candle print here, and then confirmation with this large supply candle here, and we pop back up and then continue lower down. We've popped up to the previous, see where we popped up? The same area, guys. Resistance, support, resistance, and here we go back down again. So looking for that breakthrough down here, and then moving quicker down, and then quicker down again, as it does, right? Have a good day, Hank. So, yeah, you know, right now, again, it's still sitting on the weekly, but it is looking weak. It does look like it's getting really heavy around this support here, which is right at this high volume node. So if we lose this area, again, lose that swing low there, we should, at least down into this bottom area here, and then we lose that, then we start really kind of looking down. So yeah, I do have those lower targets, the bigger ones, the ones I've had for, a few years now. But we actually have to see that follow through, right? You always have to see the follow through, guys. Don't be afraid to change what you think is going on if it warrants it, right? If there's new information coming in and what you thought was happening doesn't look like it may be happening, it's okay to change, guys. Who cares what crypto Twitter thinks? Most of them people ain't trading anyway. And of those that are, most of them are not successful. They get a win here or there, but they're losing money. Don't worry about who cares what they think. And even if they were doing well, again, who cares what they think? As long as you're using proper risk management and you understand where your validation or invalidation levels are, no matter how you're trading, whether it's Elliott Wave or Wyckoff or whatever it is, stop worrying so much about what some Yahoo online says. If there's something if you guys haven't learned anything by now about online, then get off online. Seriously. Stay away from social media. It's a cesspool, guys. It's a bunch of people who effectively live in their mama's basement, right? I say effectively because they might be living on their own, but it's the same mentality, right? Of what we consider that, right? No offense to the people that are good people actually living in their mother's basements, but seriously, guys, I get so many DMs and messages from you guys, because it's killing you. It's killing your psychology, right? It's killing your effectiveness as a trader. Stop worrying so much. The only thing you need to worry about is, are you doing things correctly? You're going to be wrong sometimes. That's okay. It's not okay to stay wrong. That's the problem. Crypto Twitter and all those other idiots on social media will have you thinking that it's bad to be wrong. The dumbest thing I've ever heard. Don't be afraid to be wrong, guys. Be afraid to stay wrong, okay? I hope to God that really resonates with you guys. Because that's more important than just talking about these targets and what we're looking at here is understanding stuff like that. Because you can do perfect Elliott Wave analysis, but you won't be able to trade it effectively unless you get that emotional side under control. Because you'll say, oh man, it should go here, right? But you won't be able to buy in. Or you'll be riding it, and at the first sign of trouble, you'll pull out. Don't do that. Don't set yourself up like that, okay? Seriously. Let me see here. What's going on with the indexes? So, we've got the NASDAQ composite here, right? This is where you say yes. Nod your heads. Man, we're getting a strong pull off here. It might have just been to fill in this gap here, but if we're dropping down below 109.38, so 10.938, that area right there, that should signal that wave 2 is done and wave 3 is in progress. And this is just locally here. From there, that'll give us a wave. Three target right there at around 88.54 or so. So, again, I keep extolling the virtues of trading futures, guys. They're a lot easier and a lot more fun than trading stocks themselves, I think, anyway. So, yeah, we're going to look for that. If we don't and we get a rally back up, then we'll look to fill in this gap fully here. Maybe get up here around the 78.6 at 11.924.61 if we break out and head up higher. But if we break down below here, I think that kind of says, hey, we're heading down here. Oh, I get the wrong 3 on there. Sorry about that. That's this one. And so, yeah, so that's what I'm kind of looking at here. The only thing that changes anything is if we break out above this wave circle 2 up here at 12,320 and 12 cents. If we break out above that, then, okay, we got to look at something different. But as long as this count remains in, we've just got a wave 2, either complete or nearing completion. Look for a breakdown below wave B. Get us wave 3 target down there. Remember, NASDAQ is tech heavy, guys. Very tech heavy. So it's affected much more by tech than anything else. E-minis hit our initial target area here at this orange supply. So I've got this potentially as a wave B triangle here. This looks like it's only 3 up. So it looks like maybe A, B, and then C is a flat. So if we can get a rally from this area, rally back up, we'll look for wave 2 up here. Around this kind of R1 on the 1 hour to the 70.5 at about 4,027.5. We'll look at it kind of that initial target area right there. And in that case, I think this maybe be B here, and then this will be a 1, 2, 3, 4 is a flat, and then 5. If we continue down from here and continue to break down below that S1 1 hour pivot at that triangle support, then this count will stay. Wave 2 will be done here. Wave 3 will be in progress. Break it down lower there, all right? And finally, the most, of the three, the most broad-based, the index here is the Dow. And so what are we looking at here? Again, same kind of idea. Potentially 3 down, 3 up, and then this is 5 down. So it could be that this is a flat for wave 4. And then we'll look for wave 5. And in that case, it might fill in this gap right here. At least up here toward 32,269 to 32,270 kind of area. It does head up. But if we continue to break down here below wave B support at 3166.01, that's going to suggest that this is wave 5 done. And we're heading down for wave circle 3. Heading down there. So that's what we're kind of looking like on those guys. Again, if you haven't seen my Sol chart, Sol here, Solana, it looks like a pretty clear 5 waves up. And it looks like ABC is W, X, and then maybe ABC is a Y. Find support right here on the S1 pivot. Spike of volume. Much greater effort. No result at all for supply on that with the smaller volume. Larger volume at the bottom. Flipped it to demand and control. Follow up through. Just trying to look to break out here and head up. If we take out wave X up here at 143.53, excuse me, we should run through the R5 pivot because that's just the way pivots usually work. If you break out up through there, then you should rally up through that R5, at least the R4, but potentially the R5. If it does like other times when we hit the top of the crypto market, we could see something stronger like that, taking it above the R5 as well. But for right now, we're interested, big picture, this is the weekly here. Does it break out above the weekly pivot at that wave X resistance, 143.5? So yeah. I mean, that's it's one of the clearest charts out there as far as that goes. We just need to see if this confirms as a WXY here. Do I have anything else for you guys? What else do I got here? Grayscale Digital Large Cap Fund. What do I like about this? I like that we've got this range here. And why do I like this range? I like the range right now. Here we go. Because we've got this volume drop off as we've gone through. We have this, this gap up and drop back down here, but on such low volume comparatively, right? So as this has continued to, this triangle or this range has continued to play out, volume's dropped off. Now, could it potentially be a triangle here? So maybe like this is a 3, and this is an A, B, C. Well, then we get a D and an E. So yeah, it's possible this could be a wave 4. And we still got a wave 5 coming down a bit further. Which might target, let's see here. Let's see again, A, B, C, D, E. I think E would probably end up right around this pivot area here. It's a high volume node. So that gives us a pattern target down here around almost around $7. And then we could potentially, again, if that's a wave 3, we could have a wave 5 down here around the 78.6 retracement at 6 3/4. But if we break out above this swing high here at 830, well, then that, again, invalidates that triangle pattern there. So that would say, okay, let me see here. What's the low here? 740. This one here is 740. So 1, 2, 1, 2, 3, 4, 5. Yeah, see, this could just be a flat correction. So we could actually be seeing something like this right now. 1, 2. Just gotta change these real quick. And then maybe 1, 2. And this would make a lot of sense because of where we are in terms of our Stochh RSI, almost bottomed out there. And of course, the range itself, with the volume dropping off as the range develops, if it's not a triangle, then it should be accumulation before rallying up. Because a triangle, a proper converging triangle, what's the word? Symmetrical triangle should see volume dropping off as the volatility, the volatility dropping off as the price kind of consolidates. But again, could be looking at this, and so again, that would be just a maybe, B and a C. So basically, we're just looking for a breakout above this swing high, which should then carry it up. I mean, wave parentheses 3 has a target here of about, I'm kind of off here a bit, but we're up there around 895 minimum. But with this other one playing out, secondary target at 932 seems more likely. If this is 1, 2 here, yeah, I get us pretty close. This R3 pivot area looks like a pretty good target area for wave 3 there. So yeah, that's what I'm kind of watching out with that as far as that goes. GBTC, some interesting things here, guys. So GBTC, I've got this as a 1, 2, 3, 4, and potentially leading diagonal for wave 1 coming off this 2019 February low, right? 1, 2, 3, 4, 5, leading diagonal working, giving us a minimum expected target of 83.50 or secondary target up here of 152. So what are we looking here? Well, look at this volume down here at the bottom, guys. Look at that volume right there. So not at the very bottom, but the next one up, which is this one. So you have this doji that's sitting out in its own here. You gap down to the doji and then gap up to the next day. So it's sitting out here, this little, don't throw the baby out with the bathwater kind of thing, right? And we get this rally up. So we got a lot of volume coming off that. So we just need to see some continuation up. But, it does look like we've got potentially a flat kind of coming out of that. Actually, you know what? That wouldn't be a flat. If this is going to be a leading diagonal, it wouldn't be a flat. All right. So this would have to be 3 over here. No, that would have to be the top there. That wouldn't be a flat, but it'd just be an ABC. That's what it has to be. Because if you have a leading or ending diagonal, you shouldn't be the corrective wave should be corrective ABCs, guys. Let's see here. Who's that? Diego? What's up, man? Good to see you checking in. But yeah, so maybe not a flat here, but nonetheless, A, B, C here. That is a lower high off that. So just a zigzag coming down there. This does count pretty well as 5 down. 1, 2, 3, 4, then 1, 2, 3, 4, 5. again, around the S2 pivot. If we put this channel on here, this wave 2, 4 channel, which is often what we do with Elliott wave. So we draw a parallel line between waves 2 and 4, or a line between waves 2 and 4 and a parallel line up on wave 3. And that kind of gives you the usual, the wave 5 target area. You can see that the EQ works really well as resistance and support. So seems pretty good. We've got this high volume node area that we're at. But we do need to see some rallying back up there. I want to see a breakout above this green line right here at around 1760 or so, 1762. That was the support. It was the support here. Gap down through it. I want to see a breakout above it to kind of say, okay, there's the first hint that maybe that bottom's in on that. But again, if you look at the weekly, we're oversold. Monthly, we're oversold. We're almost oversold here. Monthly, of course, is printing this RSI here. If we look at that, so we've got nothing really coming off here. But if we go from the swing lows to the swing low, so from this one to this one, we got higher lows here. We've got lower lows here, suggesting that if it's not already done, then it's in progress, potentially a hidden bullish divergence, which would be continuation of the trend, right? Let me see, anything else on the daily? Daily's where it is. Nothing special going on there. So, you know, again, as with everything else with Bitcoin, whether it's spot or futures or whatever, bottom could be in or it could be wave 4 playing out, and we still got a little bit lower to go for wave 5. It just depends, do we hit through those validation levels on the way up? Let me see. I think that's it. I think that's it, guys. Right here. Again, possibly could be 3, 4, and this is 5 coming down. So we could come a little bit lower here. We're heading up. But a breakdown below this swing low at 19,751.5 would suggest that wave 2 is still in progress. Either with just a slightly lower low, or if it continues coming on down, then this orange structure down here. Well, while it's above it, we'll look at this as a 1 and possibly flat with a 2 here. Whether it's terminated where it is or it's coming down a little bit lower. We'll see. So there it goes, guys. That'll do it. That'll do it. Like I said, join us at howtotradetowin.com. We've got that great 40% off of every membership, every period of time, whether it's monthly, quarterly, biannually, annually, which already, as you do, though, they already have discounts, pretty big discounts. So you're getting 40% off out on the regular prices, guys. So, you know, if you're looking for time to build and you're really learning how to trade, guys, I can't think of a better place to do it. Yeah, I know. I'm just saying that because I'm the guy that does it, right? You know, I'm pretty correct, you know, with things. So I like to think it's beneficial. If it's not, there's certainly no reason for me to keep doing it, guys. I make a lot more money trading, but I do get a lot personally out of doing what I do with our Discord members. It's pretty amazing, right? And somebody gets you, man. You know, not everybody gets it, but when they do, when they tell you, hey, you know, you finally got it. It finally makes sense to me. That's pretty freaking awesome. Anyway, so that's it. I hope you guys have an amazing week. Hey, listen, guys. Friday, I am going to do the live stream on Friday, but then our office here at TWC is going to close after that for the long weekend. I'll be back on Tuesday. We got July 4th weekend coming up. So if I don't see you, if you can't make it for that Friday stream, I hope you guys have an amazing and safe weekend. Even if you're not in the U.S. celebrating Independence Day, even if you're somewhere else in the world, I still hope you have an amazing weekend, all right? Hopefully we'll see you guys over in Discord with us. If we do, please wave, say hello. We'd love to see you guys coming on in there and ask questions, man. That's what it's all about. That's why we have Discord, for questions. So, and, you know, sharing thoughts and everything, okay? Mark, you just missed it, buddy. I hope you have a great week. But I'll be back on Friday, guys, 11 a.m. Central Standard Time. Y'all take care, all right? As always, remember, the only thing you control the market is how much you lose. So keep working on that risk management. Most important part of trading. Most important thing you'll ever do as a trader. Make sure you take it seriously. Take care.